Welcome to the Growth Cat podcast, where we chat with CEOs, investors, and other key industry leaders to uncover insights and strategies for succeeding in business. I'm your host, RJ Lumba, Managing Partner of Growth Cat. In this episode, we chat with Roseanne Wincek, an investor with IVP, which is one of the first venture capital firms on Sand Hill Road. We hope you enjoy the show. So Roseanne, thanks so much for joining us here. Delighted to chat with you. Maybe what we could do to kick off is just if you could share with our audience a little bit about your background and both why and how you got into growth investing.
Thank you so much for having me, RJ. I really appreciate it. Yeah, I have kind of an atypical path into growth investing, but I come from science, and it kind of feels like a random walk, but that I've ended up in a great place. So to go all the way back, I was a chemistry major as an undergrad. I actually went to graduate school in biophysics, and a couple of years in, I realized I love thinking about science and talking about science, but I don't necessarily love doing science. And I felt like the work that I did was so specialized, and I saw everything going on around me. And I lived in San Francisco. This is 2007, 2008, and the internet is really coming back. Facebook is really growing, and you just saw how these products were really touching everyone around us. And that made me really excited. I really wanted to work on something that I could see in my everyday life and that would affect the people around me on a daily basis. And so that really drew me kind of out of the lab and into tech. And I kind of stumbled my way in there by, starting a company. I mentioned Facebook. We made some apps on the Facebook platform. Then I moved to a enterprise software company, like a bioinformatics analytics company called NextBio that Illumina ultimately bought. And there is where I kind of first heard about venture. An investor in that company mentioned to me, or he asked me if I'd ever thought about venture capital. And frankly, I hadn't. This is early, and there weren't that many associates back then, not nearly as many as there are today. And frankly, I didn't know any VCs that looked like me. However, I kind of went and I looked, and I started reading everything I could about it. And I was like, this is the job for me. I've got to do it. And what really drew me to it was this idea that I got to, spend time in technology, think about products that affect the people around me and affect our daily lives, but at the same time, kind of get to be an academic about it, right? Like I feel as though my job is still, kind of similar to how it was when I was in graduate school. I kind of build these mental models about the world and, kind of try to do experiments about, what I think the outcomes will be or what the underlying trends are. But instead of pipetting, I talk to people. And so it's just a much better fit for my personality. And I just think it's a lot more fun. And so I ended up going to Stanford for business school, and I entered the GSB kind of wanting to do venture. And I ultimately, joined Canaan Partners, which is an early stage venture firm, which was a phenomenal experience, which I really loved. And, I kind of thought from my background of, something kind of technical and early stage companies that early stage investing was really, the right fit for me. And, I love it, but I kind of missed the data and the numbers and getting to watch companies over time. I had started a company, I had been at the company in kind of more trying times than we have right now. And I realized that not everything is always up and to the right. There's a lot of ups and downs. And, at the Series A, you're really focused on, buying 20% of the company. For back then, it was $3 to $5 million, at a time when the company had enough traction that it was interesting, but it wasn't so far along that you couldn't get your ownership target. And that really felt like a constraint to me. I'd seen companies go up and down, and I really wanted to invest when I thought the time was right for me. And so IVP approached me, almost 4 years ago now, and said, have you ever thought about growth? And, frankly, I hadn't. I don't have the typical growth background. I never did banking. I didn't kind of grow up through that system. But the more I thought about it, the more I realized that growth would kind of fulfill some of my frustrations that I found in early stage, that there wasn't a lot of data. At the growth stage, I can be more opportunistic, right? We can do Bs, we can do Cs, we can do Ds, we do pre-IPO work, we can buy the IPO, we can buy in the public market. Like, I love that I get to invest when I think the time is right, not necessarily when it's time to raise a Series A. And so I moved over to IVP about 3.5 years ago, early 2015, and it's just been so much fun.
That's great. And so maybe and so you're now at IVP. You talk a little bit about the flexibility and the way they invest. Maybe we could spend a little bit more time around that, and maybe honing in on how IVP, may be different than other growth funds out there.
Mm-hmm. I think at IVP we talk about hypergrowth a lot, and really I think we are super focused on growth. And that's kind of for two reasons. One, I think those are the most exciting companies, and you realize that when a company really hits product market fit, they can just grow so quickly that they quickly outpace their competitors, and that being in that market leader is so important. And then second, there's a lot of issues that come along with growing that quickly, right? Like in doubling or tripling your team in a year. It's an exciting time for a company, but that it's not without, a lot of hard work and a lot of landmines to navigate around. And so, I think that's where we really focus, and that's where we can really help companies to scale. We say that we look for companies that are doing more than $10 million of revenue or $10 million of run rate, and that's kind of, we kind of have that as our kind of the crude first pass. But how I think about it personally is that has the company figured out, unit economics and kind of product market fit, and you see that there's something repeatable there in the company that it makes sense to pour extra dollars into, right? I think we're the best fit when, things are working and you've seen a bunch of experiments and it's really time to step on the gas. And how do you step on the gas effectively? How do you build the team around yourself to navigate that stepping on the gas? And how do you ultimately, become that next level of company? I think that's really like where we focus and frankly where we're experts.
Excellent. And maybe what we could do now is talk about some of your recent investments that look really cool. MasterClass and KeepTruckin. Would love to hear a little bit more about kind of your experience with those two companies, and maybe also some of the work you do throughout the investment period when you're kind of a holder in the company stock.
Mm-hmm. Yeah, so we invested in KeepTruckin last December. It's really been such a fun ride. So that company is truly the definition of hypergrowth. They grew from about $1 to $30 million in ARR last year. It's unlike anything that we've ever seen. And what really impressed us about the company was how they kind of built infrastructure to support that kind of growth. And, the company, they were awaiting this. There was an ELD mandate. The company sells an electronic logging device, which is a device that truck drivers put in their cars or in their trucks, for compliance and reporting. And there was a new mandate coming out saying that every truck had to have this type of device at the end of last year. And, this company recognized that mandate and really prepared for that. And that's what made me really impressed by it. So, Shoaib Lakhani, the CEO, he always jokes that, he had Salesforce engineers and some of his first engineering hires, and they bought Zuora before they had revenue because they really had to, build for scale, like as they thought about this incoming demand. And, KeepTruckin's ELD, it starts at $20, and they sell to a non-technical customer that uses the device to get their job done and to not get taken off the road. And so, it's really mission critical for their customer, but they need to be able to sell and support that device at a very low cost because, it's not a high ASP software product. And so I just think that the work that they did to provide, such top level sales and support and really absorb this wave of demand was phenomenal. It was, frankly, I have so much respect for his foresight, and it's unlike anything I've ever seen. The work that we've done since we've invested is frankly my favorite kind. It's so much fun. We really help them with executive team building and kind of leveling up the company. I think they've gotten to this phenomenal point, and now we have so much more room to go, but we need to, now we have a giant customer base to support. Now we have to, continue building that trusted relationship with them. Now we have to think about, what else we can do with, with this customer base and relationship that we have. And so we have spent a ton of time helping Shoaib really attract and sell phenomenal candidates. We hired a new general counsel who was the general counsel of Weebly and Kiva Systems, which is the robot company Amazon bought. We hired an SVP of marketing from G Suite from Google, and we just signed a head of product last night, which is pretty exciting. And for instance, I met with that candidate earlier this week. We had lunch and just talked about everything that we're excited about with the company. And then Shoaib texted us last night, letting us know that he closed. So I think that's a lot of the kind of day-to-day work that we do, and frankly, it's so much fun. And MasterClass. We invested in MasterClass in March of 2017. I've known David Rogier for a really long time, the CEO, and he's phenomenal, and he's extremely mission-driven, which is such a fun type of CEO to work with. I've known David for a long time. I knew him when he was starting the company, and I remember he told me this idea about creating an online education platform where the best in the world teach their craft. And I was like, that's an amazing idea. I have no idea how you're going to get these people. And he did. And, I think when I also think back to my time as an early stage investor to a growth stage investor, I think about this company a lot, right? So Alex Gurevich from Javelin, who led the Series A, took a big bet that David was going to be able to create a value prop to the instructors that was compelling enough to get them on the platform, and B, have unit economics that could support good growth. And frankly, that was a bet that was too risky for me, but really good for him. He made the right bet. He picked the right entrepreneur. And, when we came around at the C, it was clear that MasterClass had created this, amazing bench of instructors that frankly, other instructors were drawn to, right? People want to be part of that club, and they've kept such a high bar on both the instructor and the content, the quality of content. And I think that's just so important and strategic today. There's so much junk out there competing for our attention, so much just clickbait and crappy stuff out there. And I think to actually, be differentiated and immersive, you have to have beautiful content. And I think they've done a phenomenal job of that. And finally, we got to see, through, their years of execution, that the economics of the business really worked and were really exciting. And, they were at that place that I mentioned before where you felt really confident throwing more money in. And so that one is also so fun because the product is amazing. Like I personally love it. Ford and Ramsey's second class just came out. I can't wait to watch it. I'm in the middle of Chris Hadfield, who's that Canadian astronaut who made all the YouTube videos. His class is amazing, and it basically prepares you for space travel because, he says some of the people watching this class will go to Mars, which is amazing. So yeah, that company is a lot of fun. And there also, we've done a lot of team building, helping with hiring, because frankly, that's the most important thing we can help these companies with at this time, right? Getting the right people in to actually do the work. And, it's not that the teams aren't great when we invest. We wouldn't invest if there wasn't a great team behind the company. But when you're going through this incredible growth trajectory, the scope of roles change and grow so much that, you either need more experienced people, or roles need to be split, or you need to, build functions that you haven't had before. And getting the right people around the table and the right talent there is what makes all the difference.
So those are two great examples of, high-performing companies and entrepreneurs. What are you focused on today? What's most interesting to you, and kind of where do you see you spending the most time over the next, couple, 2-3 years?
I think that there's going to be some of it that's business as usual. I think that the venture market has been so strong. It's frankly, it's tough to be disciplined in it just because, prices are very high. There's a lot of capital in the system right now. But on the other hand, there are so many Series A and Series B companies that are getting funded. And frankly, the quality of the companies that we see is kind of the best ever, right? I think that's due to, not only the amount of early stage capital in the market, but also, the ease of starting a company and the ease to scale a company with services like Amazon. And also the fact that, every consumer and, worker has a supercomputer in their pocket. So we just see, so much market pull plus so much underlying infrastructure that I think we're kind of in this golden age of tech companies. So, I think there's a lot, where we're just going to, I'm going to spend my time looking at, the top software and internet companies, but also I'm also really excited about new models that we're seeing. I think that we're getting to a really exciting point, for instance, with genomics and what you can do there, where Illumina is not unlike AWS, where they've kind of standardized sequencing. And so what are the applications that you can build on top of that? I think machine learning and AI are also getting to a point where we're seeing phenomenal companies where that is their differentiator and driver. And frankly, I think those business models are going to be different, right? They're not going to be software companies that just, sell to their customers. They're going to be their own customer and go to market that way. And I think that as growth investors, we have to be creative in how we think about them, where we kind of value them the right way and help them set up for success. But, I think we're seeing that already in, a lot of these kind of vertically integrated companies like Uber, right? Uber doesn't sell to taxi companies. They operate the service themselves, or Compass, right? They don't sell to real estate brokerages. They are the brokerage. They have agents. I think we're going to see more and more of that, especially driven by ML and AI.
And you've had an interesting path. Previously you were more early stage. So we'd be interested in your take on this question. Well, what do you think makes a great growth investor?
I think that's a great question. I feel very lucky that I've been an early stage investor because, I've seen how raw companies can be. I remember when I first got to IVP, every company looked amazing, right? Every CEO looked amazing because I was used to seeing Series A CEOs, and only the top, 10, 15% get to the C. And just because they get there doesn't mean they're one of the best Series C CEOs. So I think that I'm lucky having seen a lot of breadth in company stage. And why I say that is because I think it reminds me to kind of keep this beginner's mind and curiosity. And I think that's so important, even at the growth stage, of thinking about what could be. Because frankly, in venture investing, the risk reward is so asymmetric, right? The risk is that you lose your capital. The reward is that you have, a 10 or 100x, right? And so I think where we get it wrong is on the upside, right? Like we kind of cap what this could be. And I think that, right, Uber talks about having, hard times in the very early days fundraising. I don't think anybody thought back then it could be a $60 billion company. And so I think that for growth investing, it's really important to, I wish more growth investors could sit next to early stage investors and see how they get excited about what could be, and kind of, keep that curiosity in that beginner's mind, but at the same time, stay very disciplined. At the growth stage where prices are high, we're investing at high valuations. And frankly, at the early stage, you make a lot of money from picking. At the growth stage, you make a lot of money from pricing. And so making sure that you are, excited about what could be, but not baking it so much into your price that you take away your return. So I really think it's hard to be a growth investor because you kind of have to pull these two strings constantly, on one side being very, very optimistic and on the other side being very disciplined, and realizing that, especially at the growth stage, sometimes there are great companies, but they're just not great investments.
Got it. And if we could close out with one question, and it's something that we chatted about last time, but I found it to be, very enlightening. And I asked this question somewhat selfishly because I have two daughters. But if you could just share with us what, how you were able to, and maybe the people that influenced you along the way, how you were able to kind of, climb the ladder and get into the VC world. And, not only, the VC world, but just, becoming, an accomplished, person in business.
Yeah, I think, we talked about this earlier, just about, how to how you do this as, a woman in this male-dominated field. And, I think about kind of two buckets of my life. One, I went to this phenomenal all-girls school, and I was just joking with somebody about this last night, that, I remember reading about like Barbara McClintock and Rosalind Franklin, right, these female scientists that were treated really horribly, and thinking, oh my God, that's so terrible. I'm so glad that doesn't happen anymore, right? Like I grew up in this bubble being so naive that because I was told I could do anything, and I think that was to my benefit, and also my dad was just like, was really always telling me I could do anything I wanted to do. And it really felt like ad nauseum. And I was like, Dad, why do you keep saying this? Like, I know. And he told me that because he knew that, that I would get into the world and people would tell me otherwise. And so, I feel really lucky that as a young person, I really had it, kind of jammed into my brain that I could do whatever I wanted and that, it didn't matter. And then, I think I've been really lucky in my career. When I was in science, I didn't seek this out, but I worked for phenomenal women, right? I worked for Judith Quinlan, who's a National Medal of Science winner. She was the first physical science hire at Berkeley. Susan Markesy. And then I moved to venture, and I wasn't seeking this out again, but I happened to work with Maha Ibrahim, who's been at Canaan Partners for, I think 18 or 19 years, and she was just so phenomenal. And even today, I think I'm so lucky because I've had so many phenomenal advocates. Like inside of IVP, my partner Jules Maltz, that for instance, has just been so phenomenal in kind of being like both a mentor but also an advocate for me. I think one thing that you don't realize is that as kind of this minority group, a lot of times like you don't get as much voice as everyone else. And so I think that when those who are in the majority recognize that and help lend their voice to those people, it's hugely beneficial. And so, I think what we spoke about last time is, as a father telling your daughters they can do anything, like even if, they tell you like, Dad, stop and roll their eyes. And I think in work, helping people that don't have the visibility you do and lending some of your visibility to them because it helps us just so much.
Well, that's a great note to end on, and I'll definitely heed that advice. Very very insightful. Well, that about wraps it up. I really appreciate the time here today, and I think we covered a lot of ground. So thanks again, Roseanne.
Thanks so much for having me, RJ.